You're listening to Ask the Expert on Sprott Money News.
Well, greetings once again from everyone here at Sprott Money News and SprottMoney.com. This is your Ask the Expert segment for September 2017. And joining us this month is a return visit from Brent Cook. Brent is a well-seasoned economic geologist, and he is one of the co-publishers of the fantastic newsletter called Exploration Insights. He's a great analyst of the mining sector, and it is a real pleasure to get a chance to visit with him again today. Brent, thank you so much for visiting with us here at Sprott Money News.
Thanks. Glad to be here, Craig.
And before we get started, just a reminder, this Ask the Expert segment is brought to you by Sprott Money. We deal with mints around the world to bring you the highest quality bullion and numismatics. So please visit our site at SprottMoney.com to shop now. Brent, the format for this is, and the reason we call it Ask the Expert is that you are the expert. And over the course of the last month, we've been collecting questions from Sprott Money customers for you. And so I have about, it looks like 7 of them here. And if you're ready, I think I'll just dive in and hit you with the first one.
That sounds good to me. Let's see if I know anything.
All right, my friend. This is the first question just kind of deals in generalities, if you will. But given the current economic conditions, what do you think is an average all-in cost for your average silver mining company?
Oh, geez. I saw that just recently, and it varies, but it's in the range of $12 to $13, I think. But I'd better reserve that statement because I'm not actually sure. I haven't. I'll skip that question. How's that?
Well, and I tell you what, I might rephrase it too, because there are some people look at all-in costs and all-in sustaining costs just to at least keep the machines lubricated in case you can turn them back on. Can you address that? Just how that might, the difference between how you look at it?
Well, ultimately, it comes down to earnings. I mean, you look at earnings. If they're earning money, they're doing well. If they're not doing well. Most of these companies, most of the money they make gets plowed back into development, new ore shoots and that sort of thing, or moving on to exploration. So really, I think if I was going to look at a silver company, I'd look at basically what their all-in sustaining costs are, and then look at what their earnings record has been over the past few years, and then look at what their resources or reserves look like. Mm-hmm. So it's on an individual basis, to be honest with you. And I don't think we want to go into every company right now.
No, I understand. All right, with that as a background, let's move on to question number 2. Because, everybody, and I'm sure yourself included, are always trying to find exploration companies that can turn into producing companies. And the second question deals with that. It says, what conditions would keep you from buying a newly producing gold junior miner?
All right. Well, I think the answer is the same. If they're earning money, look at what their costs are and look at if they're actually putting out free cash flow. That's the bottom line to look at. And then from there, I think it's really important to look at what their reserves look like and compare their annual or quarterly production grade versus what their average grade is for the mine, so you can see if they're high grading or not high grading deposit, how that works out. So those are the 2 main things I would look at for a newly producing mine. I mean, most mines, when they start up, there are startup issues where they have to juggle or switch or work with a couple of components of the process to produce the gold. But in general, once you've had 6 months of operation, the mine should be running on schedule and on target.
And another thing too, Brent, often is this kind of, let's call it jurisdictional risk. And some folks like with Tahoe Minerals and other companies like that have run into that here recently. Just my own question, how does somebody measure that themselves without, having an expert like you in their back pocket to try to navigate through what's a good jurisdiction and what isn't?
That's a really tough question because it doesn't just go from the country. It can go right down to the very, very local level, be it the province or the county.
Yeah.
I think certainly I would look at a country, and if there are major mining companies operating there, that's a good sign. It means they've done the due diligence for you. for instance, Mexico, great place, lots of major companies operating there. And then you've got to look at the local issues. If you're in the right province, if there's narco traffic going on, that sort of thing. And, let's jump down to Argentina. The Santa Cruz province has been very good to miners. There's a number of mines been permitted and built and operating there by major companies. But in the Mendoza province, which is further north, they've just about banned all mining. So it comes down to that sort of level.
I would imagine that's right. Okay, let's move on to the next couple of questions, Brent, and they deal with specific companies. We had a question come in, and what do you think of a company called Northern Dynasty Minerals?
All right, I know that reasonably well. Northern Dynasty has one of the largest undeveloped copper-gold deposits in the world. It's up in Alaska. It's impressive. It's they've got in the order of 50 million or 25 million ounces of gold, and another, many, a lot of copper as well. It's a large, relatively low-grade deposit. It is the headwaters of the largest salmon fishery in Alaska and possibly the world, and it's got a lot of opposition from the locals, from the native corporations there, and it's going to be a very, very tough one to get passed and built. Add onto that, it's a multi-billion-dollar project to get up and running for the CapEx, and in my opinion, the best grade is deep in the deposit, so there's no real early starter pit to pay back capital. So it's not one I expect to be built or bought by anyone in the near term. It's not a stock that I own.
Gotcha. All right. Question number 4 then deals with another specific company called Artemis Resources. Do you know anything about that one, and is that a good long-term hold?
Artemis, I know it reasonably well. It's an Australian-listed company. And I was overlooking at the Novo project, Novo Gold project called Karratha in West Australia, which Artemis is a joint venture partner with Novo earning 50% for $2 million in expenditures on about 5 or 6 kilometers of the trend, the mineralized trend. So when you're valuing Artemis, you're only valuing a 6-kilometer trend, and it's not a stock that I went over there and came back buying it. I prefer to own the major company that's operating the whole trend, and I think we can talk about Novo later if you like. But Artemis, I guess to be honest, it's probably a reasonable play with the expectation that if Novo is successful drilling out on their property, it's a prime takeout candidate.
Well, I think that's probably an excellent segue to skip down a question and go to Novo, because that was one of the questions that was submitted, Brent, and it would be specifically, there are the theories that are behind Novo Resources and how much gold might be there, and what do you think of those theories? Do you think they hold water?
That's okay. So I was over there a little over a month ago, looked at the project. Quentin Henning, who worked with me at Exploration Insights for a while, I've known him a long time, is one of the top exploration geologists in the world. And he's come up with a concept and has backed it up with a lot of data, a lot of research and papers, that the gold in the Witwatersrand and the gold in what he's finding in West Australia was actually formed through the photosynthesis from very primitive algae about 2.7 billion years ago, when that photosynthesis process pulled gold, liquid solution gold, out of solution into little nuggets in the algae. So that's where it comes from. And I think that theory is the best I've heard to explain the mineralization, which is in South Africa, it's billions of ounces. And now he's got something in West Australia that was a piece of that continent way back then that is showing very extensive gold mineralization in what they're calling a conglomerate little unit. It's a stratigraphic sediment. And it's been traced for tens, if not 100 kilometers. And we're picking gold up out of various parts along that. And the theory is that is a potential host to tens of millions of ounces. And that's the theory, and that's what's going to be tested with Nova. over the next 6 months. So it is the most exciting exploration play in the world right now. And I will say, after I went down there, I came back and I bought a small position for myself.
Did you pick a couple of little nuggets out of your sandals when you got back? Did you find some?
Yeah, I did come back with a few nuggets. They're easy enough to buy down there. So it's quite exciting.
That sounds terrific. All right, I've got 2 questions left for you. We're going to shift gears a little bit. And question number 6 becomes, why is platinum underperforming versus gold? And do you favor any platinum miners?
To be honest, I don't know why platinum is underperforming so bad. I suspect it has a lot to do with its basic use is as a catalytic converters. And given we're moving more and more towards electric cars, the demand for platinum as an industrial use has just gone down. And as a jewelry, I'm not sure how well it's doing in that respect. So that's my suspicion, but I honestly don't know. In terms of a platinum producer right now, I'm not aware of one that I think is making enough money to be to own, to be honest with you. I mean, certainly Ivanhoe Mines has a platinum palladium deposit in South Africa that they're developing. Once that gets into production, it should be profitable and do quite well. So Ivanhoe Mines is probably the best play I can think of on that.
Okie doke. And then our last question, Brent, it has to do with the royalty and streaming companies. I would imagine you follow a few of those. How do those fit into a portfolio of mining shares? And can you name a few royalty and streaming companies that you like?
Certainly the royalty and streaming model makes a lot of sense. They're as the companies themselves, they need very low overhead, very few people to run the company. All they do is invest or give a company money and take some of the gold off that's produced, or silver, or whatever. So their cost of production is effectively zero. That's a great position to be in. Probably the best company that does that right now is Franco-Nevada. That's certainly one that I would consider putting in a precious metal portfolio. It's as safe as you can get in this sector. And I guess the second one I would look at is Royal Gold, which does essentially the same thing. It's a smaller company, but they're on the same track doing the same thing.
Do you find folks kind of blend in royalty and streaming companies with senior producers and junior miners and exploration companies in kind of a blended portfolio of all of them?
Certainly, a lot of funds do that. Funds I work with, they'll have the royalty companies, a few major mining companies, and you're just going up the risk profile, the smaller market cap you get to when you get to the exploration stage, highest risk, highest reward. But Franco-Nevada has performed very well and will continue. So that is still the safest bet in the whole sector.
Well, all right, Brent. It's always valuable to talk to you, and you're just a wealth of information. Tell everybody again real quick how they can find your work.
Right. Myself and another economic geologist, Joe Muzumdar, write Exploration Insights, and it's a weekly letter that comes out, and it tells you basically what we're seeing in the sector, as well as what we are personally buying with our money, what we're selling, and we only make money off subscribers, their monthly payments, and what we make on our investments. So it's about as independent research as I think you can get. And again, that's at explorationinsights.com. We've got some great free information, literature, and articles there that I suggest you all take a look at.
Brent, thank you very much. It is always a pleasure to visit with you. And again, I know everybody listening highly values the work you do and highly values this information. So thanks so much for taking some time with us today.
My pleasure, Craig. Thank you.
And from all of us here at Sprott Money News and SprottMoney.com, thank you for listening. We'll talk to you again next month.